Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil.
Paris rapeseed. Let's start here with the mid-March to late April rising wedge pattern highlighted in dark blue on my daily chart. It's a small to medium-sized pattern and I liked it. We had a false break lower in mid-April, but the real break higher happened 2 weeks after, gapping higher out of the ascending wedge pattern. Now, please remember that gap, as it will feature again shortly. Okay, so the break higher from the ascending wedge pattern quickly reached the primary target, but hesitated over the start of May, resting, it seemed, on the purple highlighted neckline, currently 485.5. That should have acted as a cap, but ended up acting as a support once prices pushed on up through it. Please remember this hesitation, as it will soon crop up again shortly. It was only last week with another gapping move higher, and another feature I'd like you to note and remember, that we saw prices drive to highs not seen since July last year, and finally reached the secondary hardest reach target for the ascending wedge pattern. However, this is not the end of the story, as past features are still dictating the future potentials. In this case, it was the two gapping moves higher and the hesitation seen in early to mid-May. I'll start with the gaps. Theory suggests that gaps happen in threes: a breakaway, a midway, and an exhaustion gap. They are not exact, but I would suggest we may well have an exhaustion gap in the next few weeks' time or so, possibly in the 515 area should we get up there. I stress once again, this is not an exact number or time that you can nail down, just a possible expectation. Then we have the hesitation of the past 2 weeks or so. This can be seen as a potential halfway hesitation with potential up to, wait for it, a target X in the 515 area as well. I will be very interested to see how these things develop and what roadblocks crop up to try and stop them happening. The first ones are already happening, and that is the congestion we're seeing around the July 2021 low at 497.5, and the congestion from July 2021 in the 504.5 area. So it's the low July 21 and also some in July 21. Winnipeg canola. The halt to the decline from last year ended up as a nice, neat horn bottom just ahead of the December 2020 low at 567. Since then, prices have rallied higher during late February and into March, up through the May 2023 low at 611.10, the 2021 low at 629.60, the short medium moving average currently 651.5, and towards the end of the end of the first rally, the medium moving average currently 632.30, and the June 2021 low at 655.90. These last two, especially the medium moving average, eroded the bullish incentive enough in late March and early April that the market halted and rebuffed trying higher for a long time, especially the testing of the next overhead resistance, the dark blue highlighted neckline currently at 644.80 of the April to June 2023 reverse head and shoulders continuation pattern. Now, between these two, the market was capped and prices dipped lower. This whole action further supported the idea I had at the time for the action since November last year, early May this year, to be a possible descending scallop pattern. Construction in an early a possible descending scallop pattern in construction. However, in the last days of May, the market staged a move higher, breaking up through the dark blue neckline, then the June 2021 low, and most recently the gold highlighted descending long moving average, currently 675 even. All this action set up the opportunity for three potential features. The first is to look at the whole of the action from the horn bottom in February to date as a bullish halfway hesitation. This will give a primary target X in the 704.40 area, for harder to reach secondary target X1 up in the 730.90 area. Secondly, we are set up already with still a week to go for the month of May to possibly be a monthly key reversal. Thus, if on Friday the 31st prices close either over 636.10 or under 618, then we're beyond. Anything in between will have a lesser outside month pattern. Right now, we are most definitely looking at a monthly key reversal up. Thirdly, there is still the idea of a descending scallop pattern, but with a break higher instead of lower. Thus, a primary target of X2 would be in the 739.30 area, with a harder to reach, much harder to reach target X3 up in the 812.5 area. Now this last one, looks particularly ambitious. There is one other feature I'd like to discuss, and that is the purple highlighted mid-February to early May bullish Andrews pitchfork. The market is at the moment still crawling along the middle time, currently at 694.10. I like this bullish Andrews pitchfork as it shows the bullish angle attacker of the market quite well. But I'm not in love with it, and I would retire it or replace it with a bullish shift pitchfork as soon as I thought it would be a better fit. Finally, I would only once again add the following as a postscript to what I've already said. It's something I first said 21 weeks ago, and I quote, I would add this final thought. I'm increasingly becoming interested in knowing if this market is really an indicator, especially if an indicator, a leader if you will, of what the other oil seeds and vegetable oils may have to deal with. End of quote. To this I added 10 weeks ago, and I quote, this also means on any recovery and move back up, and not only on the way down. End of quote. Bursa Malaysia crude palm oil. It has been months, many months indeed, since we had the key break higher over the upper time, currently at 38.58, of the August to November 2022 bearish shift pitchfork. Yet I have kept this pitchfork still on my daily chart, and this week even highlighted it in purple. Why have I done that? And why did I do that? The reasoning became clearer over May as the market hesitated and started building a base on this very thoroughly broken upper time. Now, it's been helped by the 50% Fibonacci line of the May 2023 to April 2024 move at 38.75, as well as the flatlining long moving average, currently 38.78, and the bright red highlighted May 2023 to date uptrend, currently at 38.55. So after the moves higher in March, we had a decline in April, and during May we have had the start of what looks like a bottoming action. It's only becoming evident now, especially with April being a monthly key reversal down, but it does have some significant elements. So what now? Well, 10 weeks ago I gave my thoughts on what was going on, and I quote, so what now? Well, for this I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched. And that was the November 2022 high at 44.08. This is a key level on the top side, because 44.08. Because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in an area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level. End of quote. I can think of no better way than to still monitor what the market does at the 44.08 level should we get up there. We just need to overcome the mauve highlighted medium moving average, currently 39.95, Then the dark blue neckline, currently 40.94 of the September to November 2023 reverse head and shoulders bottom. The green highlighted short medium moving average, currently 40.90. The July 2023 high at 41.89. The twin 38.2% Fibonacci lines of the July 2019 to March 22 move at 42.39. And the May 2020 to March 2022 move at 42.74. With the neckline of the September 2015 to November 2017 head and shoulders top currently at 42.65 in between. So, quite a mouthful and quite a bit to be looking forward to if prices do rise. And this is where I come to this week's action. We're on the verge of making a weekly key reversal this week. So if we close either over 38.94 or under 38.79, then we'll be on. That's tomorrow, Friday. Anything in between and would have a lesser outside week. Right now, we are very much looking at a weekly key reversal up for this week.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.